Did you know you can use your home's equity to pay off your bankruptcy? If you're in a Chapter 13 plan and have at least 20% equity in your home, this option could help you speed up financial recovery and move past bankruptcy sooner than expected. Home equity is the difference between your home's current value and what you owe on your mortgage. For example, if your home is worth $400,000 and you owe $300,000, you have $100,000 in equity. Lenders typically require you to maintain at least 20% equity during bankruptcy, but if you have more, you can access it through options like a cash-out refinance or a home equity loan. A cash-out refinance is the most common option. It replaces your existing mortgage with a larger loan, and the difference is provided as cash. This can be used to pay off debts, including bankruptcy obligations, while potentially lowering your monthly payments by consolidating high-interest consumer debts. Another option is a home equity loan, which acts as a second mortgage, giving you a lump sum of cash. However, second mortgages are harder to obtain during bankruptcy, so a cash-out refinance is often the better route. FHA loans are a great option for borrowers in bankruptcy because they offer low interest rates and flexible eligibility. To qualify, you'll need at least 12 months of on-time payments, a credit score of 580 or higher, stable income documentation, a letter explaining your bankruptcy, and trustee approval. If FHA guidelines don't work for you, non-QM loans are an alternative. While they come with higher rates, they're tailored for unique situations, like recent bankruptcies. The benefits of using home equity to pay off your bankruptcy are significant. You can speed up your financial recovery, reduce your monthly payments, and improve your credit score. This can open the door to better financial opportunities in the future. That said, it's important to consider the risks. Increasing the debt secured by your home could put you at risk of foreclosure if you can't make future payments. That's why working with an experienced lender is essential. They'll help you explore your options, weigh the benefits, and ensure you choose the best solution for your financial goals and circumstances. Using home equity to pay off bankruptcy is a powerful tool for financial recovery. With the right approach, you can take control of your finances and move forward with confidence. Visit jvmlending.com for more info or to talk to a bankruptcy mortgage specialist directly.